Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Asia podcast. I'm Brian Curtis along with Doug Krisner. Join us each day for the stories making news and moving markets in the Asia Pacific. You can subscribe to the show anywhere you get your podcasts and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app. Well, China has asked South Korea to maintain stable supply chains and to be a trustworthy partner. We get more on the story from Bloomberg's Min Lo in Hong Kong.
Chinese Premier Li Qiang told South Korean President Yoon Suk-yeol China wants the two nations to be trustworthy neighbors. He said each country should help the other to thrive. These comments came as the countries began their first three-way summit with Japan since 2019. Li said both sides should avoid turning economic issues into political issues. The Chinese Premier also said Beijing welcomes South Korean firms, including Samsung, to expand in China. Beijing, Tokyo, and Seoul are said to be looking at several areas of cooperation, including the economy and trade. In Hong Kong, I'm Min Lo, Bloomberg Radio.
Joining us now on the program is Richard McGregor, Senior Fellow for East Asia at the Lowy Institute, to take a closer look at this story and perhaps talk a little bit about that U.S. delegation in Taiwan and also Jensen Huang. Richard, thank you so much for joining us here on the program. So the news is tightening a little bit on China. We had the G7 finance chiefs criticizing Chinese trading practices, and also at the end of last week, the U.S. Moving to reimpose tariffs on hundreds of Chinese goods. And now this Trilateral summit. What are the deliverables here for each of the countries, just if we could sum up briefly?
Well, I think first of all, the medium is the message in a way. Remember, as your reporter said, this is the first time in 4 or 5 years. And one of the fascinating things about it, of course, is that the problem hasn't been China-Japan, which is usually the problem, but it's China-South Korea. They've had a particular rocky patch. And so the fact that they're all able to meet now, I think, tells you that China wants to re-engage with those countries, its close neighbours, both politically, but most importantly, economically and technologically.
Is this a kinder and gentler Chinese regime at the moment?
I don't think there are very many, I don't think either the US nor China is kinder and gentler at the moment. I think both countries are looking for leverage. They're not looking for an off-ramp for their competition. And Japan and South Korea are vital. They're both long-time US security allies. And they've both become very wary of China politically and economically. Remember, South Korea underwent pretty severe economic sanctions from China from 2016 over the installation of the THAAD anti-missile shield in South Korea. And so that really hurt relations. And then, of course, the President Yoon made some comments about Taiwan, which really angered China. And so China has found its influence and its economic role in both South Korea and Japan to a degree diminished. And also, of course, the US wants South Korea and Japan to cooperate in its own sanctions against China on semiconductors and the like.
Yeah, so we see the U.S. definitely exerting pressure on the G7, and that's been toughened. The EU has toughened policy to a certain degree on China. I'm curious how much pressure you think the U.S. is applying to its close partners in Japan and South Korea to do more of the same against China.
Well, I think an exceptional amount of pressure, but in some cases, a country like Japan is applying its own pressure. So Japan, for example, which pioneered successful industry policy back in the 1970s and 80s, it really wants Europe to come on board with the US in trying to constrain China in some respects. So yes, US is putting pressure on, but in some respects, Japan, and to a lesser extent, but to some extent, South Korea, they're willing to work with the US. I just think it depends on how far it goes and the detail, really.
Let's talk a little bit about the delegation of U.S. lawmakers that are in Taiwan now, and also Jensen Huang of NVIDIA. These trips are planned out, fairly far in advance, I would imagine. Is there much significance in Jensen Huang going to Taiwan at this time?
Yeah, I mean, you'll struggle to get a really detailed answer from me about the detail of Mr. Huang's trip, about exactly what he'll be doing. But I just think it's a reminder that, Taiwan is the global center of advanced semiconductor manufacturing, even with building a couple of plants in Kyushu in Japan, constructing one in Arizona and Germany. The importance of Taiwan is not diminished. And yes, Taiwan has been willing to put TSMC factories elsewhere, but TSMC has made sure to keep its most advanced chips manufacturing in Taiwan itself. So, I mean, in that respect, all lead to Taiwan, and it's no surprise Mr. Huang would be going there.
Yeah, what did you make of the Bloomberg story last week? And it was later confirmed to a certain degree by ministers in Taiwan about the ability for TSMC and ASML to, have a kill switch on the advanced semiconductor manufacturing equipment in Taiwan.
Gosh, a kill switch, one wonders if there, heaven forbid it won't happen, if there were a conflict, military conflict involving Taiwan and in Taiwan, what would happen to TSMC facilities? You hear some wild stories that they would be bombed by anti-China forces to prevent China sort of benefiting from them. Then there's the issue of whether you need to do that at all, because of all the value of TSMC is basically inside the engineers' heads. And that's the value, not just the sort of hardware that they built, it's the updating of it. I don't think China's interest in Taiwan is about its semiconductors. But if they were to take over the island, then that is obviously a tremendous prize they would seek to leverage.
Sometimes when we mention to people who only look at this issue from afar, they're surprised to hear that for China, Taiwan is issue number one. It's a bigger issue even in some ways than global trade, because it goes to the reuniting of China. And you spent a lot of time, Richard, in Beijing, and you've covered China for, since we met back in the 80s. So it's been a long time. Is Taiwan any less important now, or is it more important now than it used to be?
No, it's more important. And Brian, you're aging us both, but we actually met and worked together in Taiwan in the late 1980s. And I think it's more important. And it's more important in this respect is because once China coveted Taiwan, but they did not have the military or political capability to move on the issue. That's all changed now. And you look at the blockade that China imposed on the island after Mr. Lai Ching-te's inauguration, and they did that rapidly. China would always wanted to have done that, but they didn't have the capability to do it. Now they do. They have the military capability. They're militarily dominant in that area. And I think, yes, so it's more important because now they can act on what they've always wanted to act on.
We had Einar Tongan from the Lowy Institute on the program late last week, and he tends to lean pro-China in some ways, but he was saying that a blockade for China wouldn't make any sense because it would also disrupt its own trade to such a degree that it would be too punitive.
Well, that's right. That's why many of the options that China has, none of them are easy. And of course, you can do a blockade. We might wake up one morning and China has declared Taiwan part of its customs zone. But, the US could do a counter blockade against China, against its energy assets, for example, and other raw materials going through the Malacca Straits and elsewhere. So that would hurt everybody as well. But, it's not only China has options, others have options. I think China's problem is that it's been so bad at winning any support on the ground amongst the Taiwanese people that they've only left themselves bad options. I mean, all Xi needs to do is to get Taiwan to agree to negotiate, but public opinion and political parties in China won't do that until China gives them some incentive to, rather than simply threatening them.
All right, Richard, unfortunately out of time, but always a pleasure. Good to talk with you again. Richard McGregor, Senior Fellow for East Asia at the Lowy Institute. Well, it was about 10 years ago that President Xi Jinping gave a very important speech, a pivotal speech that would set China on course to dominate the electric vehicle industry around the world. And joining us now is Linda Liu, Bloomberg China Cars reporter, to talk about the extent to which, Linda, China has achieved that dream. Are they there on the precipice?
Yeah, you would be on the money because 10 years ago, the auto industry in China looked very different to what it is today. At the time, China sold fewer than 80,000 EVs and hybrids. It exported about 500,000 cars, and the domestic market was dominated by international manufacturers like Volkswagen, and domestic brands are perceived as being inferior. And so fast forward to 10 years, we've seen China come to be the world's largest market for autos and EVs. They've overtook Japan as the world's largest exporter. So they've come a really long way.
Well, it's interesting that the challenges at home are not so great for continued EV dominance in China, but challenges abroad are getting a lot tougher now. How much tougher is it going to be for China to build on some of those gains outside the country, or will it mainly only be difficult in the U.S. and Europe?
Yeah, it's really interesting because now that China has built up its domestic autos and EV supply chain, it's looking to expand abroad. But in the process of that, it's actually going to kind of step on the toes of some entrenched auto industries in other countries, because essentially with the rise of EVs, it's going to disrupt traditional auto supply chains that employ millions of people. So you've seen the US, already quadrupling the import tariffs on EVs, and the EU is about to announce results from an anti-subsidy investigation also into Chinese EVs. We've also seen action from Brazil where they removed a tax break for EV imports. So these countries are really putting up trade barriers, and that's going to be a challenge for Chinese car makers who are looking to expand internationally.
So China looks to be hitting back with the China Chamber of Commerce, talking about raising import tariffs on cars with large engines. How much would that hurt some of the European automakers and to a lesser degree, perhaps American car makers selling there?
Yeah, for the potential hike of this import tariff on large engine cars that China has hinted that it may do, it will mostly hit European brands like Mercedes and BMW because they're the top importers into China right now. And interestingly, the largest importer of autos into China last year was actually Toyota. So we're going to have to see how this tariff, if it is raised, will play out because Japan may become collateral damage. American car makers actually don't import that many cars into China anymore. So this action, if it goes ahead, will probably mostly impact European automakers.
I think a lot of listeners would be curious where China's strongest markets are outside of Europe. Let's say, for instance, in South America or on the African continent. Where is China having the most success in moving its cars abroad?
China is actually growing its exports in different parts of the world. Like you said, South America is seeing a really big increase. Looking at countries like Brazil, Mexico, China is doing a lot of exporting there. Emerging markets is where China performs the best because they tend to be countries that have more friendly relations with China. So we're also seeing healthy growth of Chinese supply chains expanding as well as exporting into Southeast Asia, Africa, like you said, essentially places where there aren't as many antagonism and trade barriers against China.
One of the other interesting areas for Chinese EV makers is at the luxury end. We know that BYD is now producing more luxury models. Zeekr is another one. NIO is another one. Is that an area for growth for the Chinese car makers, let's say, over the next decade?
Yeah, the Chinese car makers definitely want to raise the average selling price of their vehicles, and going upmarket luxury is a surefire way to do that. One of the challenges is really around brand building, which is something that not just automakers, but Chinese companies is really having, I guess, to learn how to do and trying to cultivate their own brand. Looking at markets like Europe, customers there actually have very strong brand loyalty. Some families may be driving Volkswagens for generations. So for Chinese automakers going up markets, trying to build their brand, they really have to take the time and investment into doing that.
All right, Linda, thanks so much for joining us. Always interesting to catch up on the latest developments with Chinese automakers. Linda Liu has been with us, Bloomberg China Cars reporter. Well, joining us now in our studios right here in Hong Kong for discussion of markets is David Chao, who is Global Market Strategist for the Asia Pacific at Invesco. David, thanks very much. So we've run through some of the top stories there. It's an interesting environment, kind of bullish, I guess, coming off of some of the trading last week, particularly tied to AI and NVIDIA. What is chief of mind for you as we start this week?
Well, I think that there are a few things going on. I think that there continues to be questions as to if this AI trend has more legs to run. I think so. I think that the earnings guidance given by NVIDIA and also other related AI manufacturers and AI apps, it shows that companies are spending money on capital expenditures on their AI development. And I think that, whether this has the same effect on the economy as, say, the internet did 20, 30 years ago, is yet to be seen. It's probably not going to be as significant. But I think that the AI development is a very, very important technological breakthrough that should be a very strong investment growth trend over the coming years.
So let's talk about how the tentacles of this trend extend out into the marketplace. So if you're a believer in AI, and you need only look at NVIDIA's earnings to show that there are a lot of people who are believers, and that's not so much on bidding up the stock side, but in the actual business side. So if you think about those tentacles and how they spread, where do they go?
Well, I think that there's both downstream opportunities for investments, such as AI requires a lot of energy, so it requires also a lot of precious metals, industrial metals that go into manufacturing a lot of the semiconductor chips. Then you can go upstream in terms of investing in some of the applications that the AI technology runs on. So I think that there's a significant number of opportunities. We look at other places that have perhaps more interesting pockets of opportunity in places like Korea and Taiwan. The stocks there and the indexes there are more weighted towards AI-related technologies. So I think that for those that have felt that they may have missed out on the single stock run in the U.S. or other places, I think that investing in the Kospi or the Taiwan index could be an interesting opportunity here.
We had an interesting line out of the stock exchange operator in South Korea, urging directors of listed companies to play a more active role in enhancing shareholder returns. When you talk to people about Japan and about South Korea, they sometimes talk about corporate governance improving. Is that part of your approach to those markets as well?
Well, I think that corporate governance improving is somewhat of a subjective and relative term. But what's interesting there is that companies are being encouraged very meaningfully to increase shareholder profits and to increase shareholder maximize shareholder value there. We haven't seen this development for a very long time, and it's having a pretty pretty significant impact, I think, overall on Japanese stocks, both in terms of we're seeing the valuation starting to really ramp up. Little known is Korea and what's going on there. And I think that similar efforts to maximize shareholder value is also starting to develop. So I think that these places, are barreling down the right road.
Yeah, some of these areas would include better treatment of minority shareholders. That's one thing. Also, buybacks, which you mentioned, and maybe raising dividends. Among those three things, is anything that stands out? And is there anything else in this general area that companies are doing that, are appealing to investors?
Well, I think that these places in the past, we haven't seen activist shareholders. I think maybe from a cultural standpoint, in North Asia, it's, investors had tended to be very passive when it comes to directing corporate governance initiatives. But I think that's starting to change. And I think the change is good. And I think that we can continue to expect further, developments.
Yeah, that's a very good point. It's something I left out was the embracing of activist investors who really take a look at management and try to get better management, better decisions out of the board and the management on policies. So I think that's it's a good point to make. Now, in terms of the big macro setup, we know that the Fed looks positioned now for higher interest rates for longer. Do you expect that to change anytime soon?
Well, I think that that continues to be the million-dollar question. I think even among the Fed, we continue to see somewhat conflicting signals. I think it's very clear that Chair Jay Powell perhaps is a little more dovish when it comes to instituting the first rate cut compared to other members of the FOMC, which was very exemplified in the recent FOMC minutes. So I think it continues to be up for debate.
Yeah, I spoke with an investor in the last hour who was particularly nervous that the Fed might want to kind of further brandish its sort of toughness and its ability to fight inflation once growth starts to weaken, to continue with this posture of higher for longer. Is that something that you fear as well? Well,
I think that many strategists, economists were wrong in thinking that the U.S. Was going to hit a hard landing last year. We certainly didn't see it. We're not seeing it this year so far. I think that U.S. growth is certainly starting to mollify, starting to slow down a bit in many signals. And I think the U.S. is really hitting kind of this two growth spurt. With the lower incomes.
Like a K recovery, right, where the wealthy classes are doing fine, but the lower income strata not so fine.
That's right. So I think that if you're the Fed, you're looking at this, and so your hands are a bit tied in terms of trying to assess what the economic growth landscape really is. And I think that going forward, U.S. growth is going to stabilize a bit, and but I think at the end of this year that we could start to see a bit of reacceleration.
And some investors that I talk to believe that, generally speaking, the market is not discounting a number of areas, particularly geopolitics, the two wars that it could be a third war if you talk about a trade war between the U.S. and China, that there is still a lot of risks out there that perhaps need to be better discounted.
Oh, indeed. I think that, we get questions about the U.S. presidential election and the risks there. I don't worry about that. What I do worry about are other geopolitical risks. I think what's going on, we haven't seen wars in Europe and the Middle East at the same time for a very long time. And so I think that that's perhaps one of the risks that needs to be better appreciated.
Do you worry that whoever becomes president, at some point, they're going to be facing this notion that they need to raise revenue, that the interest expenses are hurting a lot, particularly given the high level of interest rates? And if former President Trump wins, you're probably not going to see higher taxes, but you might if Joe Biden wins.
Well, I think that the U.S. debt burden has certainly been on the minds of many, and a significant portion of the U.S. debt was really racked up over the past 6 years. But ultimately, the U.S. government is one of the biggest holders of debt. Institutions are a holder of U.S. debt. So I don't really see that becoming a significant issue. Although the higher interest payments certainly is mind-boggling. I think that there's more payments and more capital devoted to interest payments than defense spending in the U.S. But I think ultimately, if the Fed is going to cut rates, and we still expect them to do so, perhaps at the end of this year, that should provide some relief.
Okay, I'll give you the 60-second elevator pitch. What is your best investment idea at the moment?
I still really like emerging market equities and European equities. In Europe, European equities are relatively cheap, and both the French and the German economy are starting to improve. I also really like non-investment grade quality debt, things like senior loans, bank loans, perhaps things like private credit. We continue to be in an environment where being exposed to high interest rates makes sense.
You like private credit rather than just going into the public markets?
Well, I think that given where spreads are right now between high yield spreads, it doesn't make sense to take that risk there. But I think that private credits continue to be, we continue to see very juicy spreads, and I think that this is a diversifier to one's portfolio.
Okay. Well, David, thanks very much. Monday morning, you got to hit the ground running. You come in here and get 9 minutes of questions on every front. Thank you for joining us in our studios on a Monday morning. I mean, these guys eat it up. Don't worry. This is what they do for a living. David Chao has been with us from Invesco. This is the Bloomberg Daybreak Asia podcast, bringing you the stories making news and moving markets in the Asia Pacific. Visit the Bloomberg Podcast channel on YouTube to get more episodes of this and other shows from Bloomberg. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen. And always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.